group insurance presentation, and Patty Perry is here with Apex. Morning, Patty.
Awfully early on a Monday morning to be talking about insurance, but I'll make it as painless as possible.
Is that on, Tom?
Yes.
All right.
Okay, again, I am Patty Perry. I'm with Apex Benefits. Here to talk about the proposals and the recommendations for the 2026 plan year for the benefits. In your packet, the first thing that I'm going to go over is the projections for the medical plan for 2026. Pull those off the top of my head. So right now, you guys typically fund to the midpoint, which means that we look at your expected claims and all your fixed costs, and we calculate what those expected claims and fixed costs are going to be for the upcoming year. And you can either fund to expected or maximum, or many employers choose to go to the midpoint, because about 80% of the time you're going to hit at or below that midpoint for your claims. So that's typically what the Montgomery has done over the years, is fund to that midpoint. So looking at 2026, that midpoint amount would be a 5.6% increase. Right now, you guys are funding with your set premium equivalents approximately $2.4 million for 2026. That would require for that midpoint a $2.6 million funding, which is about $138,000 between current and projected for 2026. Okay. Next thing I'm going to look at is the ancillary benefit renewal report. So I'm not going to go page by page in that. I'll just go over the highlights of what is in there. So your dental renewal with MetLife, there is no increase to that, so they are holding the rates. We did go ahead and market to other carriers, and there wasn't anything financially compelling to recommend a change from MetLife. Same with the vision with MetLife, 0% increase. The market didn't yield anything compelling. The voluntary accident, critical illness, and hospital indemnity, those are also with MetLife, and those are currently in a rate guarantee till January of 2027, so no change in those. Switching gear to the life insurance with MetLife. So the basic life insurance with MetLife was a 13% increase. It's just over $2,000 annually increase in those, and that's the employer paid benefit, so all benefit eligible employees receive that benefit. We did get a compelling proposal from Lincoln Financial that is actually 17% below the current, or about $2,700 in savings annually, with a 3-year rate guarantee. So if we move to them, we would lock that rate in for 3 years. On the voluntary life, so that's an employee paid portion of the life insurance that employees have the option to purchase. Lincoln just matched those rates that are currently with MetLife. So a lot of times administratively, it's easier to keep that employer paid and the voluntary life paired together with the same vendor. So they just matched those and also gave a 3-year rate guarantee. But they did also increase the guarantee issue amount, so the amount that a new hire coming in could elect without any type of health history or anything like that, from $100,000 to $200,000. So they did actually increase the benefit. The disability products, so short-term disability with MetLife was a 3% decrease, so savings of about $2,200 a year. Lincoln proposed 9% below current, so that increases the savings to about $66.52 annually, again with a 3-year rate guarantee. And then the long-term disability, MetLife was holding those rates, but Lincoln came in with a proposal at 37% below current, or a savings of $11,000 annually with a 3-year rate guarantee. The only piece of the puzzle that we won't wrap up just yet is the stop loss. That's that protection for those catastrophic claims, because those stop loss reinsurers like to see at least 9 months of claims data before we can lock those in. So we're currently in the process of finalizing that. So the recommendations that we've got is to keep the premium equivalents based on the projections that you guys have for 2026, and the reserve fund that you guys have is to just keep the premium equivalents the same for 2026. So not to increase what the employees pay per pay period for their benefits and what the employer's portion of that is. So keep those flat. Renew with MetLife for the dental and the vision, and then the voluntary accident, critical illness, and hospital indemnity. So stay with MetLife for those. But then to move to Lincoln for the life, the voluntary life, and the short-term and long-term disability to take advantage of not only those savings, but locking in those 3-year rate guarantees from them. No change in the HSA contribution that the county provides to employees that are enrolled in the health plan. So just as a reminder, right now, employees, that's prorated over the year per pay period. They get $750 put into their health savings account. And then they also have the option to earn an additional $750 if they go and get their annual biometric screening and wellness visits. So they have that option to earn that as well. And then the health reimbursement account, that is an avenue that helps employees with that high deductible health plan. So the deductible for your high deductible health plan is $5,000. Right now, the employees are responsible for that first $3,300, and then the HRA kicks in after that. The IRS indexes that minimum deductible amount every year that in order for a plan to be HSA eligible, and for 2026, that minimum is $3,400. So we propose to increase that employee liability for that first $3,400, and then the HRA kick in and pay that next $1,600 after that. And then offer a premium holiday on the health plan for employees, so they would have no payroll deduction on their plan for November and December of 2026. And then the last two couple things, we can get some tech credits from Lincoln by moving to them that would help pay for or possibly pay 100% of a bin admin system. What that does is just kind of make it so that you have one-stop place to put in all new hire changes, enrollments, terminations, things like that, rather than going into the third-party administrator, rather than and Lincoln and MetLife every time you have to make a change. It would be one admin system that Nicole in the auditor's office would just have to enter all of those changes, and then it automatically feeds. So we can get tech credits to provide a system like that. So that's an item to consider. And then the last thing is considering implementing a Samaritan Fund. So I believe, Lori, that information was in the packets as well, wasn't it, on Samaritan Fund? Yes. Yeah. Okay. So the Samaritan Fund is a program that we, Apex has been vetting for some time now, and we're starting to have some of our employers implement it. So what it does is if you have any large claimants on your plan that they know that they're going to have 50, 100,000, even more in maybe pharmacy, or they know that they've got chemotherapy or something like that going on with them, Samaritan Fund is exactly what it sounds like. It's Good Samaritans that have donated to this fund to help people that are facing those catastrophic claims, because a lot of times people are filing bankruptcy because of those high-cost ongoing medical claims. So what it does is if the employee applies for it, they have to fill out a HIPAA form to release their medical information, and they will review it. And if they are approved for the program, then they help get them onto an individual plan on the marketplace. So then they come off of your health plan. If they're approved and they accept a plan onto the marketplace and they come off of your plan January 1, the only responsibility to the county is $50,000 to pay for that member to come off of the plan. So if this person is projected to be a $200,000 for their expected claims for the coming year, and they come off your health plan and you're only paying $50,000, you've reduced your liability. So something to consider. You guys are running really well right now and don't have any catastrophic claims, but we are just putting that out there so that our clients do know that that is one of those cost containment strategies that we are looking at for our clients in the coming years.
Patty, I have a question.
Sure.
The additional items to the last two you mentioned, is there like an admin fee if we decided to implement those?
So on the Ben admin system, we will get tech credits from Lincoln. So we would evaluate the Ben admin systems that are available. One of the ones that we use quite frequently is Employee Navigator, for example. And if we can get enough tech credits based on the enrollment in those benefits to pay for it 100%, then it would be no cost to you. So that would be something that we would evaluate, and if it did come back that it was a cost, we'd come back to see if that's what if we still wanted to pursue it. But there's no cost to you for the Samaritan Fund unless somebody actually goes to Samaritan Fund, gets on one of those individual plans and accepts it, then the cost to the county is $50,000 for that person to come off. If they have, so for example, if it's the employee and maybe he's got family coverage and he's employee spouse and got children and he's a high-cost claimant, he's going to come off the plan and go on to the Samaritan Fund, then it would be $50,000 for him, but now his family's no longer eligible to stay on the plan by themselves. So for each one of those, the spouse and or children that came off, it'd be $15,000 to a cap of $100,000 per family on an annual basis, and they have to reapply for Samaritan Fund on an annual basis. So say that it was a chemo and they knew they were going to have high-cost medication for that injectable infusion drug for that year, and so they applied for Samaritan Fund, got approved, came off the plan for 2026. They wrapped up that treatment, didn't have it ongoing, then they could come back onto your health plan. The one thing I neglected to mention is that the benefit to the employee is that they have no out-of-pocket expense. So they no longer pay a premium, so Samaritan Fund pays for the premium for the employee, and then they're given a debit card that equals their full out-of-pocket maximum for their health plan. So every time they go pick a prescription or get any kind of treatment, it's paid for 100% by Samaritan Fund. So that's what, when we talk about, the people having to file bankruptcy because of healthcare or their health care because of a catastrophic event, this is how it helps them so that they just focus on getting well and they don't have to worry financially about any of that.
Thanks.
Okay.
Patty, how do we make sure that employees are educated about the
Samaritan Fund?
the Samaritan Fund?
Yep.
And
So they provide you a full array of different kinds of education material that you can send out to them, whether it's emails, flyers, things like that, and you offer it to all eligible employees. Obviously, not everybody's going to be approved for it. It's just anybody that's got any kind of catastrophic claims ongoing, because, everybody would like to have free health care and no out-of-pocket and things like that. But it does have to be somebody that is in one of those situations where they do have ongoing large claims. So they just are educated on, they're given even a QR code or a link that they can go on and complete the HIPAA form. And then once they do that, then they will Samaritan Fund reaches out to them directly to walk them through the process and get their medical records, and that whole process takes about 3 weeks. If they're approved, then they will talk to them about, okay, let's look at the individual marketplace. Who are your doctors that you're seeing, or what are the medications that you're receiving, to make sure that they can then find a plan that meets their needs. Because we don't want to put them on a plan on the marketplace where we can't find their medication or something like that. So that all of those things have to fall into place, but they white glove the employee or the member and help them through all of those steps as well.
yeah, I'm thinking more along the lines of ourselves and all the department heads here in the room. How do they? The best way to educate their
Yep.
department employees to make sure they're aware of this and they don't miss out on an opportunity to
Yep.
take advantage of that. So
So-
I just want to make sure that
Yep,
we're
and so
doing
one of the
what
things that I can do is I can send it to Lori and she can send it out to you guys, and then if you want to move forward, send it out to the department heads. There's 30-minute, I think it's twice a month, they do webinars to educate the employers and department heads, if that's what you wanted to do, so that they understand how the program works. It's open forum, so anybody can ask questions, but they do those webinars twice a month. And then there's employee education as well, so webinars that we at Apex are going to be offering in September to employees that they can join to learn more, ask questions, things like that.
Thank you.
Okay?
Patty, when do they need to, what's the deadline to approve the premiums?
As long, because since we haven't wrapped up the stop loss yet, and we usually do your open enrollment like early November, so I would say sometime in the next 30 days. Because that'll give us plenty of time to get things ready for open enrollment.
I know this is informative, supposed to be for informative only. Do we need to, can we put this on the agenda then for our next meeting, which would be the first meeting in September?
Yeah, and in the meantime, Lori, I'll resend you that stuff on Samaritan Funds if you guys want to educate yourself and learn more about it in the meantime.
Patty, you had several figures there of a decrease by going to Lincoln. Do you have a total savings that would be with all those put together?
Not off the top of my head, but I can get it all added up and send a summary over to Lori to get to you guys. I think the back page just shows if we moved everything over to Lincoln. And that's not going to be a complete depiction because I'm proposing that we leave the dental and vision with MetLife, but it's going to be pretty close to that. And that would be a $24,000 savings, or
that's
about
close.
8%.
Right.
Any other questions?
No, I guess my one comment is the 5.6% increase is still within reason, I think, but just, I guess, for information only, that's the largest increase we've seen in the last several years. We've been below 5 for a few years now, so, and was really happy with that compared to what we were hearing other people go through, but
Well, and I
It is
think
creeping up
that,
a
so
little
you
bit.
guys did have a couple large claimants, one of which we know is not going to be ongoing for 2026, and that was taken into consideration when we calculated these. So that's why I feel very comfortable in us keeping that funding flat from 2025 to 2026, knowing that that's not going to be an ongoing concern for 2026.
right.
Anything else? Thank you. We'll put that on the agenda for our next meeting.
Perfect, thank you.
Next, we have a request to close a portion of Glenway Drive on September 6, 2025. Tom, you want to speak to that? Oh, there you go. Yep. I know we've done this, I know remember we did that last year, so. Yep.
So basically the same setup as last year. Want to close down just a portion of Glenway Drive from 1089 to 1126 for a block party. It's going to be from about noon to 8 p.m. that day.
Do we need to do anything sign-wise? I mean, I can't recall what we did actually last year to make sure that it was.
It was on us.
Okay.
I went
Yep.
to the highway department.
Sure.
Got blockades.
Okay.
Got everything done.
I'd move to approve the request.
Second.
Any discussion? All in favor, say aye.
Aye.
Aye. Opposed? Thank you.
Thanks.
Thank you.
Appreciate it. Next is the TREX program with Probation Department.
Good morning,
Morning.
Andrea Geigel, Probation Department. We are looking at joining the TREX program, which is the Tax Refund Exchange and Compliance System that's offered. I gave you the IC code, I've given all of the contracts, the MOU and everything, included with the emails that I'd sent. The county already has an established MOU. The treasurer's office is the office that's been using it for several years, even prior to Heather. So there's no new MOU required. We're simply ready to get signed up, but we didn't do the sign up till we came to you guys for permission to do that. Basically, the TREX program allows certain entities to be able to go back and put claims against individuals that owe money, and it comes from their tax return. So for an example, if somebody owed the probation department $200, we would have gone through the proper procedures to put a claim towards that. At tax refund portion, IRS would withhold that $200, put that into a Trust Indiana account for probation, and then ultimately return the rest of the refund to the client. So we get our portion, they still get the rest of theirs. Doesn't do anything negative to the client from the standpoint of there's no garnishment, there's nothing on their credit history or anything of that nature.
Entertain a motion to approve.
So moved. So moved.
Second.
Any discussion?
No, we get 100% of that money back in our county.
Correct, so whatever's claimed, and there's only a small minor fee associated with it. The Trex program gets $25, and then the IRS, of course, takes a certain percentage. But it's still relatively low compared to any, what's the word I wanted?
Collection.
Collection agency,
Yeah.
thank you.
Heather?
Come on up, come join me.
Heather Lurfin from the Treasurer's Office. I just want to clarify, it's Indiana State Tax Returns, it's not the IRS. Okay, not IRS, not the
Thank you.
federal.
Thank
Yeah.
you, thank you.
So, and the people that have the claims, your clients, are the ones that pay those fees. The county does not pay the fees. Okay? Sorry, thank you.
Thank you.
No,
Thanks for clarifying that.
No, my only thing was, you said went into an or Trust Indiana fund, and anytime Indiana gets the money, you never know for sure how much of it you get back, so I just want to make sure we're getting the whole portion back other than the fees.
Yes, and Heather has one, and we could do a sub-account. When it's all said and done, what they recommended that probation does is to have a separate account from Heather, and it keeps it completely separate.
Okay.
So Heather and I had discussed that part
Okay.
too.
Anything else? All in favor, say aye.
Aye.
Opposed? Thank you.
No, I appreciate it.
Next up, appointment to the Health Board. We have a vacancy on the Health Board with a vacancy left by Kyle Hunt, and it's recommendation to appoint Lauren Nichols to fill that position. Tom, do you have anything to add to that? No?
I'd move to approve.
Second.
Any discussion? I think that fills, I do believe that fills all the empty seats on that board, so.
So we still have a vacancy that is one that council
Yes.
would need to.
Yeah. And I think they've, yeah. All in favor, say aye.
Aye.
Opposed? Passes. Next is USI Consultants Agreement, preparation of fiscal year 2026, the CCMG grant application.
Good morning, Jake Lowe, Montgomery County Highway Department. So I'm just asking for authorization to proceed using USI for a contract to apply for CCMG, help get documentation, and close out that grant if awarded. We're choosing to do 625 East for 500 North to 32, and then 600 East from 32 to 136 with a hot mix asphalt application. This was chose by following our CCMG paving policy. It's a major collector. It connects the northeast and southeast quadrants, and it connects 3 major highways.
Entertain a motion to approve.
So moved.
Second.
Any discussion? All in favor, say aye.
Aye.
Opposed?
Thank you.
Thank you. Next is Century Roofing Incorporated, the construction agreement.
At the last meeting, you approved the awarding of the bid for the work at the jail, for the jail roof, and so this is the contract to do the work, and it has all the amendments that Dan has requested to be added to the contract.
Entertain a motion to approve the work to be scheduled and completed by October 31, 2025.
It's been moved.
Second.
Any discussion? All in favor, say aye.
Aye.
Opposed? Next is our open the owner-occupied rehab bids.
Hi, gentlemen. I'm here to
updates or fill you in on anything you've got there. Chris Kruger from Fry West Central. And then I have some questions for you guys.
We'll open these up.
So you've received several bids on the owner-occupied program. I'll just take them one at a time. First, for 722 East Main Street, Waveland, a roofing quote from E.C. Smith & Sons, $8,900 for the house only, $12,900 for the house and sheds. From Crawl Space Remediation for 616 East Pike Street, a remediation bid of $1,800. And then Deborah Tartar, is that RT? Yeah, RT Construction Services, several bids. The first one is for 7968 North, 1000 East Darlington, and it is for roof work, roof replacement, and it's $17,975.04. Also from RT for 114 East Washington Street, New Richmond, also for a roof replacement, $13,441.32. Also from RT for 722 Main Street, Waveland, house only, $8,323.20. This RT, again, this for the garage only at the same address, 722 Main Street, Waveland, $8,538.04. And finally, from 32 Heating and Cooling, a quote for 722 Main Street, Waveland, $11,900.
Tom, did we get the other roofing ones that we missed? Smith & Son?
Do we need to take these under advisement? I'm going to entertain a motion, take these under advisement.
So moved.
Second.
Any discussion? All in favor of taking these under advisement, signify by saying aye.
Aye.
Opposed? Okay. Then next is going to be the approve the contracts that we previously had. Tom?
So you have contracts for the bids that have been opened in the past and awarded for Crawl Space, J&L Plumbing, Smith & Sons, Blessed Construction, Pro Choice, and Cox Roofing, and in your packet, and RT Construction. And your packet lists all of the different properties each one will be responsible for.
I'd move to approve.
Second.
So these are all approved, and you guys are good to go. You're good with these. Yep. All in favor for approval, signify by saying aye.
Aye.
Opposed? There you go.
Okay. Couple of questions for you guys. We have 3 properties that are a little bit over the 25,000 cap. Is this something you would like us to work with the homeowner to determine which ones to do? Obviously, we have to do radon, we're required to do that. But if they have to choose, let them choose which activity they would prefer versus, you know. Okay,
How do you normally handle it?
You guys are my brand new. So, some places do it with okay, it's the cost, right? So if they had, the cost of the roof is higher than the cost of HVAC, maybe we should do the HVAC and do it this way. Most places go back to the homeowner and ask, because they're the ones that are gonna know the need more so than we are. From us, we could say, well, your roof looks like it could handle something, but inside, it's a mess. So that's usually why we just go back to the homeowner and ask to work with them on that. Great. Sounds good? Okay, one of the properties was quoted for 2 ramps. It was our recommendation to go ahead and ask the county to go ahead and improve both ramps because of the fact that if there's an emergency, they would not be able to get out one door, they're trapped. So we just wanted to verify if that was a good recommendation, if you guys approved of that one. That unit, that is the only thing they've asked for is ADA. Alrighty, I don't know, we want to talk about a property that is located in the middle of commercial, and if that, it is marked as residential on the property card. It's kind of a unique situation because it is literally in between 2 commercial buildings, and it used to be apartments prior to the current single-family registration. Looks kind of odd. So it's kind of 3 levels for the roof, and they only need the roof. This was a new one for us.
Yeah,
Sorry, I don't know.
Chris asked about this. I think the property is zoned residential, correct?
Yes,
And
and
it's
I
3
provided in your copy of the card, pictures of the property and the inspectors.
So how do these things all line up with the overall dollar amount of all of what the grant itself is going to cover and the caps? And, I mean, if it fits it within the guidelines of what
The
you've already
guidelines-
established.
Right, the guidelines establish that it is owner occupied and primary residence. We don't stipulate where it's located, and we don't necessarily stipulate other, unless they don't meet the manufactured, but we don't stipulate the type of home. Okay, so some places say, you know, if it's less of an assessment and the money makes it hard, makes it a different
And this-
formula. So
And this
is-
property is owner occupied, right?
Yes.
Yeah.
It is, yes.
So it fits in with what your guidelines are, correct?
It does, it does.
So then why would we need to make an
The concern
exemption?
is where it's located and potential, the concern lies in, a lot of times state and federal money does not like to have benefit to for-profits, meaning businesses. And this happens to be located between, at least the one side's got businesses. So by fixing their roof, are you benefiting them? In this case, their roofs are higher, so you're not necessarily benefiting them. You are going to benefit this particular home. And the other situation we have to think about is since both sides, the roofs are higher, it kind of could potentially be making a funnel onto their property. So you're projecting more damage with the weather and so forth. So the positive is we're helping them out with that situation. At this point, we're not seeing any benefit to what the state and federal government would say being a for-profit.
I agree with her. I mean, it's zoned residential, it's owner occupied.
Yep.
I don't see how you could justify anything saying
yeah.
there's any
If it
benefit
fits
to
within-
industrial.
Yeah.
Okay, and
If it
that's
fits
fine.
in with what we've already established,
Sure.
then you don't need an exemption from us, then.
Right,
I'd like to make sure you guys know that in case anybody were to
sure.
ask.
We appreciate that.
Okay. Let's see here. As we are nearing the end, do you feel that I should notify those on the list that we're close to the end? Just put a blurb on the website saying we're close to the end, go ahead and you can apply, but we don't know what's going on, and/or notify those that are still on the list. I can do all of them.
I don't think there's anything wrong with giving people the information that's
Let 'em
available to,
know
that,
yes.
that way that
Sure.
they're not blindsided, and I think that would just be an upfront, honest, and
Right.
transparent, it's fine.
Yes. We have, you have 47 applications, and I've still got 2 or 3 that called me last week. So you guys are still getting people interested in it. Was there any questions for me while I'm here?
I don't have any at this time.
Sure, okay. I'm checking my list. Since there's a lot of these contracts, we may adjust the start and end times, because some of these gentlemen have got a lot of work coming up. Smith and Sons, for example, may have at least 7 to 11 contracts. So instead of them all starting within 2 weeks, we may adjust that so that we can just taper them. Another recommendation we have is with the J&L. They also, too, have a large amount, but we want to taper him and start with a handful, see how he does, and go from there.
Okay.
Sounds good.
Great. And should I circle back on Smith and Son? Okay. All right.
Thank you.
Thank you very much.
Thank you, gentlemen.
Next up, open the landfill grading project bids.
Yes, you have 2. You have one from McCullough Excavating, Bainbridge, Indiana, and that bid is, excuse me, $62,000. And the second bid is from David Price Excavating, and it is $74,250. I'd recommend you take them under advisement and have them reviewed.
I'd make a motion to take these under advisement.
I'll second.
Any discussion? All in favor, say aye.
Aye.
Aye, opposed? Dan, we have ordinance 2025-22, amendment to supplemental corrective action plan retirement. Tom?
Yes, this is an amendment to this prior ordinance you adopted that had a payback plan for elected officials to pay back the retirement contribution that the county had made for them to catch them up for past years. In conversation with the county surveyor, there was a request to make his payback, make it coincide with the remaining term of his office. And so instead of having 2 years to pay back, it would be 3.5 years or so to pay back. Mr. Cummins has one of the larger amounts to be paid back because a few years ago, he was not included in the county's retirement plan.
Entertain a motion to approve?
It's been moved.
Oh, sorry.
Do we need to go ahead and do this?
Can we go ahead and do this?
I'd move to suspend the rules.
Second. Any discussion? All in favor of suspending the rules, say aye.
Aye.
Opposed?
I'd make a motion to approve ordinance 2025-22.
Second.
Is there any discussion? I'm definitely okay with this.
Yep.
All in favor, say aye.
Aye.
Aye. Oppose. Motion passes.
Good way to keep him in office.
All right, nothing under resolutions or other business. Lori, Tom, you have anything?
Mark and Sherry have birthdays this week. Dan had a birthday last week, and Mike Davis as well, I think. And a few folks in apparently the assessor's office, everybody has a birthday in August.
4 of them? Entertain a motion to adjourn.
So moved.
We are adjourned.